This was just this crux moment where Becky asked him about raising how much people are paid. And basically what he's saying is, I want dignity. I want dignified. I want employees who feel empowered. I want employees to feel good. This is where I think Jay Powell's struggling with. And, David, you know I feel that Jay Powell is secretly a person who wants the working person to make more money. That we have to encourage, we as a nation.
Made it that big a secret, but sorry, go ahead, yes.
Well, we have to encourage the nation, the idea that a working person at Target should make enough money to be able to feed family and have a good life.
Right.
And that's what Brian's not sitting there trying to say, you know what? We're going to penny pinch. He's not Potter.
No, he's
not Potter. He's
not.
He's
yes.
Bailey.
And they're talking about what wages that could get up above $20 an hour.
Well, why not? Why shouldn't the American working person who works at a registered Target make a decent amount of money? It's a hard job. It's somewhat times a thankless job.
That has been a positive aspect of our current economic environment. Now, many would say, well, inflation, of course, has that pernicious effect of negating those gains for the average worker. But wages are up, and up sharply. And it's not just Target. Amazon, obviously, will tell you over and over again what they're paying people. Because they are paying them closer and closer to that number as well.
Well, I just think that we have to keep track of the fact that when we hear about wage inflation, we should be a little more, Carl, just a little more deferential to the American worker. It's like, wow, they're making too much money? Sorry. When we see what the CEOs make, I think that there's this, we don't want two classes in this country. We don't. I'm sorry to be so. I'm not being
we've had that, and it continues to be the case for a long time. And by the way, I would point out over the last 2 years, most likely, I think the benefits of the Fed's incredibly large balance sheet have probably gone to the top echelon.
But did you not think that the mayor talking about compassionate capitalism
was interesting? Yes, Mayor Adams yesterday.
That was visionary.
Yes,
it was really an incredible conversation about the need for everybody.
I was happy to hear the words capitalism. That was good.
Oh, he's very pro-capital.
He is. I know. It makes him maybe an enemy here in New York. You got to be careful. Watch your back.
I thought he acquitted himself incredibly well.
Guys, I wanted to talk Lucid if I could for a moment because it's going to be down sharply. It is down 18%.
How's that lockup coming?
Now, Lucid, remember, is still one of the most successful SPAC deals. So few are trading above $10, the price at which obviously you could have redeemed a long time ago before they even did their deal. Lucid obviously has been a great success, but it is down dramatically, 38% so far this year. The company reported earnings. The main point of concern appears to be the outlook for 2022 production.
Yeah.
Now a range, guys, of 12 to 14,000 vehicles, reflecting what they say is the extraordinary supply chain and logistics challenges we've encountered and our unrelenting focus on delivering the highest quality products. They do remain confident in their ability to capture the tremendous, what they call, opportunities ahead, Jim, given their technology leadership and demand for their cars. But that's not a lot of cars.
No. If I were a Ford Motor, I'd be selling that Rivian, by the way. I mean, I think that these stocks are a little overinflated. Actually, Lucid was, I'm going to put it in the disaster camp because they didn't like the carpet, didn't like the rug. See how few cars they sold in the fourth quarter?
Yeah, you and I have both talked to Mr. Rawlinson in days past. We have a quick soundbite from him from the earnings conference call. Take a listen.
We have an unerring focus on addressing some of the supply chain challenges. We see them to continue for the next few months, but we see an uptake in the second half of the year. So we're really optimistic that we're going to be able to resolve these.
They're optimistic.
It's good to be optimistic. Churchill always liked that strategy.
Churchill was the actual acquiring.
That's why I mentioned it. Because
I like
remember,
that. God, you're so good, really. How do you do that?
It's a talent.
Michael Klein, of course, one of the kings of SPACs, made an enormous amount of money with this deal at Churchill. Of course, Churchill 1, 2, 3, 4. I forget which. I think this was Churchill 4, right? I think it was, yeah. But it's one of the few SPACs that's still trading above 10, but well below.
But you notice, Carl, there's some of the pandemic stocks are doing a little better. Now, I think that the Zoom shortfall was overrated as a shortfall because they are growing 11, 12%. It's a little expensive. DocuSign making a bit of a comeback. DocuSign mentioned positively on the Zoom call. Everyone's written off every one of these stocks. But again, we come back to stocks that have been crushed to levels that you just say, you know what, I'm going to take a flyer.
Yeah, the Zoom guidance was a little bit light.
Right.
They're looking for Q1 87 cents, Streets at 103. Citi cuts their target, I don't know, $10 down to 139.
Right.
Reiterates are neutral today.
But I think people are really struggling. They don't feel like they can buy stocks because there's a column 40 miles long headed toward Ukraine and then toward Kyiv. And then there are other people who say, you know what, if they stop that column, the world's going to change. So I think that there are a lot of people who say, you know what, Target gives me cover to buy stocks. Workday gives me cover for tech. The only thing that doesn't have any cover are the banks. And I don't know what to say about the banks. I really don't, other than the fact that most of them are completely uninvolved. And after every one of these European downturns, our banks come out stronger. But nobody cares because they're such easy dominoes to knock over.